Assalamualaikum warahmatullahi wabarakatuh. Today's our group from KMD1 will present about the mini case study in terms of budgeting. Here are our best team including me, Muhammad Rizwan and student Muhammad Idris, metric number 1212761, Muhammad Fatul Naim and Muhammad Adham. Moving on to the table of content, there are two questions that arise in the mini case study in terms of budgeting. Question 1 is about the Seman Industrial Case Corporation and question 2 about Tanjung Piai Company. Now, we start the question 1A. Prepare a schedule of expected cash collection for November and December. First of all, we put the collected from account receivable in the question, which is 83200, and the second is collected from November sales. We get from the 340000 multiplied by 75% ringgit, we get the 255000. And for the December, 34000 times 25%, we get the 85000. And for the collected from December sales, we get from the 360000 times 75%, we get 27000. And the total cash collection for the November is 338200, and while for the December total cash collection is 355000. Okay, next we move to the question 1B, which is prepare a merchandise purchase budget for November and December. First of all, we calculate the budgeted cost of goods sold, which is we times budgeted sales with the cost of goods sold, which is 0.71, and we get for the November budgeted cost of goods sold 241400 and the December 255600. After that, we calculate the desired end inventory, which is the calculation from the budgeted sales of month times with the cost of goods sold, which is 0.71, and also times with the next month cost of goods sold, which is 0.75, and we get the desired and the inventory for November 191700, and while for the December 186375. After that, we added budgeted cost of goods sold with the desired and the inventory, we get the inventory required, and inventory required less with the beginning inventory, and the last we get the merchandise purchases. So the total merchandise purchases for November 252050, and for December the total merchandise purchase is 250275. Moving on to the question 1C, prepare a cash budget for November and December. First of all, we need to find the total cash available. To get the total cash available, we added beginning cash balance with the cash collection. Next, we find the cash disbursement. Okay, to find the total cash disbursement, we added the payment for merchandise inventory and other monthly expenses. After that, total cash available less by the total cash disbursement. So we can get the ending cash balance. Ending cash balance for November 142800, and for December 224350. Additional info, payment for merchandise inventory, we get from the merchandise purchases for November from the question 1B. Question 1D, which is prepare budgeted income statement for November and December. To get either gross profit less by operating expenses, we can get the net operating income. So, net operating income for November, which is 56000, and for the December 61800. Last but not least, question 1E, which is prepare a budgeted balance sheet for the end of December. First of all, assets. The item of asset is cash, account receivable. Account receivable we get from the budgeted December sales less by uncollected December sales. Next, merchandise inventory, property plant equipment, which is cost less by the accumulated depreciation, and we can get the total asset for the December, which is 1464325. And second is liabilities and stockholders equity. The item is account payable, common stock, and retained earnings, and we can get the total amount, which is the total liabilities and stockholders equity, 1464325. So total asset equal to the total liabilities and stockholders equity. That's all from me about the question number 1. Next, I will pass to the next presenter to move to the question number 2.
So we move to the next question, which is question 2E. which is direct labor rate variance. The first step is we calculate actual hour times the actual rate, 2000 times 7 ringgit, and plus the overtime work 1400 times 7 ringgit 20 cent. We got 24,000 ringgit and 80, and we calculate another actual hour times standard rate, 3,400 times 7 ringgit. So we got 23,800 ringgit, and we minus 23,800 ringgit by 24,080 ringgit. We will get the 280, which is unfavorable because the actual rate is higher than the standard rate. So we move to the question 2B, direct labor efficiency variance. We calculate by actual hour times standard rate, 3,400 times 7 ringgit. We got 23,080 ringgit, and we calculate standard hour times standard rate, which is 800 times 4 times 7 ringgit. We got 22,400 ringgit. So we minus 22,400 ringgit by 23,800 ringgit. We got 1,400, which is unfavorable. This is because actual hour is higher than standard hour. And another question is 2C, direct labor efficiency variance. First, we calculate the iron. Actual quantity times actual price minus standard price. We got 5,000 times 2 ringgit minus 2 ringgit. Actual price 2 ringgit, standard price 2 ringgit. So we got 0 ringgit. For the copper, actual quantity, we use the same calculation. So we calculate 2,200 times 3 ringgit 10 cent minus 3 ringgit. We got 220 ringgit. So the material price variance is 0 ringgit plus 220. We got unfavorable because the actual is higher than standard. Proceed to next question 2D, direct labor efficiency variance. For the iron, we use the formula standard price times by actual quantity minus standard quantity. So 2 ringgit times 3,900 minus 800 times 5. So we got 200, which is, this is favorable because standard quantity is higher than actual quantity. For the copper, we use the same formula, 3 ringgit times by 2,600 minus 800 times 3. So we got 600, which is unfavorable because the actual quantity is higher than standard quantity. So we, for the material quantity variance, 600 unfavorable, we minus by 200 favorable, we got 400, which is unfavorable because the actual quantity is higher than standard quantity.
So for the next question is question 2E. The question asks for overhead expenditure variance change, and the calculation is by minus variable overhead, which is already stated in the question, which is 12,000, and we calculate the actual hour times standard rate, which is 3,400 times RM 3 ringgit, and we get 10,200. Then we minus 10,200 by 12,000, and we get 1,800 unfavorable. It is because actual is more than standard. Then for question 2F, the question asks for overhead efficiency variance change, and to find the overhead efficiency variance change, we need to calculate first actual hour times standard rate, which is 3,800 times by RM 3 ringgit, and we get 10,200. Then we need to calculate standard hour times standard rate, and which is 800 times 4 times RM 3 ringgit, and we get 9,600. And from this we can minus 9,600 by 10,200, we get 600, which is unfavorable. Then for the question 2G, the question asks for budget variance expenditure for fixed overhead, and the actual are already stated in the question, which is 8,800. And for the budget, we need to calculate by 4,000 times RM2 ringgit, and we get 8,000. So to find the budget variance, we need to minus 8,000 by 8,800, and we get 800 unfavorable. Last, question 2H, we need to find the volume variance on fixed overhead. On this question, the budget we already calculated earlier, which is 8,000, and we need to find applied, and the formula is standard hour times standard rate, and from this we can calculate 800 times 4 times RM 2 ringgit, and we get 6,400. And then to find the volume variance on fixed overhead, we need to minus applied by budget, and then we get 1,600 unfavorable. It is because actual amount is more than standard amount.